Well, those are the big headlines that we are tracking for you today on The Money Show. But of course, the topic at hand is advance income tax. Today is the 15th of March, which means it's the last date to pay your advance tax for the year FY21, or rather the last installment of it. By today, you should have ideally paid off 100% of your tax liability for the year. But the question is, of course, how do you go about calculating it, and also who is liable to pay? So to, answer all of these questions, Amit Maheshwari, the tax partner at AKM Global, now joins us, in fact, right here on the show. Hi, Amit, a very good evening, and thanks so much for taking our time today to join us on The Money Show. So, Amit, to start with, why is it important that, taxpayers ensure payment of advance tax in a timely manner on the 15th of every quarter?
Thanks, Mubina. Thanks for inviting me, and a very good evening to you and all our viewers. So, advance tax basically is a tax which everybody pays on their own account without the government interfering as such. So you basically estimate your entire liability for a tax liability for a year and pay that amount to the government. Now you only pay that if your total tax outgo, advance tax outgo, would be more than 10,000 rupees in a financial year. So if you have that, then you need to calculate your advance tax and pay that in 4 quarterly installments. And as you rightly said, today you need to pay 100% of the entire amount. And if you don't pay that, so there's no penalty as such, but then you need to pay a compensatory interest to the government. And that interest is actually quite punitive, considering we have very low rates of interest on FDs, etc. So nobody likes to pay these heavy interest payments. And as a good corporate citizen, it's always better to pay your taxes on time, so the government can use that to do welfare of the state.
So 100% of the income tax liability is expected to be paid. This is an extremely important one. By now, you should have finished paying it. Now, the question, of course, is not everybody knows, what... by now, actually, you should have a fair assessment of what essentially, is going to be your total income. So tell me this, Amit, many a times individuals do have TDS, etc. paid on certain kinds of income, like, for example, their salary or, bank FD interest, etc. So what exactly then, Amit, should be, rather, how should they then calculate, how much are they liable to pay? Is that supposed to be deducted, Amit?
Yeah, sure. So for the benefit of the readers, when I was mentioning about advance tax, so senior citizens are exempted from paying advance tax, provided they don't have any business income. So just for the benefit for the listeners. Now, on your specific question on how do you calculate that? So you calculate your total tax liability of the entire year, your estimated tax liability, by including all sort of incomes which you can have, which could be salary, other than salary. And then you deduct whatever TDS has been deducted, TDS and TCS has been deducted, you reduce that, and whatever balance is left, that is the advance tax which needs to be paid. Now, in a typical scenario, when you have a salaried individual, assuming he does not have any income other than salary, almost all of his TDS would be rightly deducted by the employer, and therefore he would end up paying no taxes. But yes, when you have other incomes, you need to estimate that and pay that. Whatever taxes have been deducted at source, those will be reduced, and advance tax is not deducted. You have to pay it from your own pocket on your own account.
All right. Amit, my next question is with respect to the tax investments we make. I mean, as salaried employees, if you're working, with the corporate, you usually have the EPF, the Provident Fund, that's deducted by the employer, etc. All that comes under Section 80C. Besides that, I also pay Mediclaim. I may be making, life insurance premium payments, school fees, etc. All of this is actually available as a tax deduction. Is that as well to be considered, Amit? And assuming, given the fact that it's still the 15th of March, so technically I still have another 15 days before maybe, of course, it's very last minute, but many taxpayers tend to leave it to the last minute. So I have another 15 days to make my PPF payment. Still, today when I'm making the advance tax liability payment, is it okay for me to consider that?
Yeah, absolutely. So it's all purely based on estimation, and your estimation should be, I mean, as reasonably accurate as possible. Just to give you an example, if you have a recurring insurance policy payment, let's say on the 28th or 29th of March, now that's something which obviously is not paid by before 15th of March. That also has to be considered. So you can consider all of that. I'll tell you the practical challenge. See, you can always do quite a lot of your ATC deductions till the very last moment. But what happens is you need to give declarations to your employers at the start of the year. Now, when you do that, based on that, they do your monthly TDS deductions. However, by January, February, most of the employers put a hard stop that you need to now start showing up your actual proofs. And if you don't do that, they will assume that you have not actually invested that amount, and would make that shortfall of the TDS good. Now, you can always claim these deductions in your tax return and then take a refund, but that's how it works. So that's a small practical challenge. But to answer your question, definitely 31st March is the date. You are allowed to do it to the very last day.
All right. And Amit, are there any, I mean, I know you mentioned that the penalty is extremely harsh. So how do they calculate it? I mean, if let's say I have missed out on payments, etc. And also, let's say if somebody is, realizing today that, oh, okay, I missed the 15th December deadline, I missed the 15th September deadline, but I can still make it good. Should that person still go ahead and, let's say if they've paid only maybe 10-20% via TDS, should they still go ahead and make the balance 80-odd%?
They need to do that. So they are primarily, so one is if you miss your quarterly payment, so which if you miss that, so the amount which you missed to the next month, if you are able to fill that amount or fulfill the shortfall, then on those 3 months you will actually need to pay 1% every month. So that's one interest part which you need to pay. The other interest is that if you under 234B, section 234B, so wherein if you don't pay your advance tax fully, so from 1st of April, so after 31st March, from 1st of April till the time you actually pay the entire taxes, to that extent, again, there is a 1% interest per month. So now this adds up. So there are two interests. One is after 1st April, the other is when you miss these quarterly installments. So let's say in the first installment, instead of paying the requisite amount, you pay in the second installment. So to that extent, the 3 months period, you will be levied interest. And that's how it gets calculated. As I said, these interests are like 1% per month, so it becomes quite a bit.
All right. Okay, so that's essentially about advance tax. Now, there's another topic I wanted to talk to you, Amit, about, and that is the fact that we just have a fortnight left now to make our, to plan for our taxes for the year FY21. Unlike last year, it's not likely that we're going to get an extension in the last date to, make your investments. I was just talking to Amit as well about it, that, you have certain investments that you make, which you have to consider when you, consider your advanced tax liability. So this is the portion I want to talk about, tax saving investments. Amit, according to you, what's the best way that taxpayers can, and given the fact that we have 2 weeks left, the best way that taxpayers can sort of invest their money, utilize their money to minimize the tax bill at the end of the year?
It's a slightly difficult question, but it all depends on what kind of individual financial goals somebody has and in what bracket they tend to fall into. Having said that, there are quite a few popular ones like life insurance premium. Now, earlier we are coming off from days where insurance premiums, those pure annuity insurances from Life Insurance Corporation (LIC) were very popular. To these days where people have realized the need to have higher insurances and take term insurances. So insurance is something which is very essential. Every individual should have it. So this becomes by default a very important tax saving tool as well as a financial planning tool. This of course comes under ATC, and insurance premium it comes under ATC provided certain thresholds are met. Now, interestingly, ULIPs have a cap. They were earlier very popular. Now they are not. And from a financial planning perspective, also it's better to keep your investments and your as well as your insurance needs separate. But this is very popular. Then ELSS are also popular, reasonably popular. However, it's just that a lot of people tend to think of them as a short-term planning vehicle because after the 3 years lock-in ends, they immediately want to sell their ELSS mutual funds. Now, that's something which is not advisable. However, a lot of our clients also and individuals do tend to put money into ELSS, which gives good tax break. Again, under ATC, you have PPF, Public Provident Fund, which is extremely popular, but it has a lock-in of 15 years. That's also popular. And then you have tuition fees and you have tax-free deposits. So most of us have housing loan, repayment of housing loans. Now that also comes under ATC. So by default, if you have an EMI going, that repayment of housing loan will come under that. So these are all under ATC, some very popular ones. But you also have, like you said, health insurance. I mean, everybody is advised to have a Mediclaim. You can claim deduction for yourself, for your parents, for your family. Then NPS is another one which is very important. And lastly, I mean, if you have an education loan. So for a salaried individual, these are the kind of important ones which everybody, most of the people seem to take it and are able to also invest it and align them as per their own financial goals, which is very important because you just don't take something for tax saving. It needs to fit right into your financial planning perspective also.
That's a very important point you mentioned. You have to look at tax planning also as a part of financial planning because, you can't think that, okay, a PPF is a great product, so you let me put my money in a PPF because what if you need that money? There's a 15-year lock-in period, which, is quite long. But again, having said that, it's a great way to save money, and I mean, if you have kids who are younger, who are 18, 19, it's a great time as well to start because, of course, it's a public provident fund scheme. It's government backed, so there's no credit risk. The interest rates as well are not at all bad, 7.1% in an environment like this. ELSS, of course, is a favorite product. We have a ULIP, though of course Amit does say it may not be the best idea to go for a ULIP. You rather keep your insurance and mutual funds separate, but you do get a tax benefit if you invest in ULIPs. And finally, of course, LIC, the most popular common product, basic term life insurance plan also will do the trick over here.